How does your credit score affect your mortgage rates? Ever wanted to know? Well, in that case, listen on. This is Ella Gurfinkel, Senior Loan Officer with Fairway Independent Mortgage and Team Ella. Everybody thinks they know what their credit score is, right? There's Credit Karma for that. Well, that's a topic for a whole other video, but your credit scores are vitally important for the type of a loan program and subsequently mortgage rates that you can get. Let me explain. The lower the credit score, the more you're limiting your choices of the type of financing you can get. So what do we have for financing? We have our garden variety, FHA, USDA, VA, conventional, jumbo, and then we have subset of non-traditional or non-QM lending. Now, typically, a 580 credit score will get you into an FHA loan, but the lower your score, the more dearly you're going to pay for that mortgage with a higher interest rate. Sometimes you're looking at a difference of as much as 0.5% in the rate alone for having that low of a credit score. Am I saying you can't or shouldn't get a loan? That's not what I said. But I'm just letting you know that with some work, you can raise your scores, and if you go over 600 score, that improves your rate substantially. There are other loan programs like USDA, for example, where you can't even consider going into a USDA, or it won't consider you at 620 or below. So you have to be over 620. VA follows FHA with credit scores to the most part. And yes, while there are options to get you in with lower credit scores, there are also some, not so much tricks to the trade, but there are strings attached, and it makes financing a lot more difficult. And we're speaking in more general terms here in the first place. If you're talking about a conventional mortgage, you want the scores to be 620 or better from the technical standpoint, from what the guidelines say. The real life, however, with the lower down payments, I'm yet to see personally a solid approval with a 620 credit score and the lower down payment levels. So realistically speaking, if you're planning on putting a lower down payment down, let's say 3, 5, maybe 10%, you really want your scores to be at 660 or even 680 level or better. Now, if we're talking about the jumbo category, meaning in most parts of the country, 726 loan amount or higher, well, then you really want to be in the 700s. That will be a subject for a whole other video, not necessarily subject for this conversation, as we're talking about credit score specifics here. Now, how do those credit scores play into the rates? Again, FHA, the lower the score, the higher the rate. Conventional, that effect on the rate will be even greater. So you really want your scores to be as high as humanly possible, because where somebody with a 700 plus credit score may be looking at a rate 675, this is just this week's rates on average. Somebody with the credit scores that are in the lower 600 range may be looking at rates as high as 7.5 or higher, just to give you an idea of how big that impact is. And the bigger your loan amount, the bigger that impact is to your mortgage payment. You're looking at hundreds of dollars difference in the payment alone, therefore in how much you can qualify for. So if you want to know how your credit score affects you individually or you specifically, comment below, reach out, and we'll let you know with a situation that's yours and yours only.